I'm Mark Gardner. It's the 27th of February, last day of the month. And look, NVIDIA, really positive results yesterday, like another bumper quarter, really upbeat guidance. We did see the stock move up about 5% or so in the aftermarket, and it was just met with just a wave of selling. So, yeah, it really failed to clear what is obviously exceptionally high bar that the investors were looking at, and I'm not sure how you could have set the bar any higher. There's commentary highlighting their ballooning sort of $95 billion purchase obligations, obviously around memory, etc. And data centers and things like that. So essentially capex, but versus 16 billion only in the a year earlier. So there's concerns that cooling AI demand could leave the balance sheet exposed. To be honest, I think the market's just looking for excuses to sell it. I think they were going to sell it no matter what. And this hasn't surprised me really. It's a sentiment thing. I mean, technicals will look really good leading into it. We broke to a new high. They were really positive results. They beat on all metrics. The market clearly wanted to sell it and just found a reason to sell it. I think this result 12 months ago would have seen the stock go up 10% plus on the day. And that's it's just the world we're in here at the moment with AI. There's a fair bit of souring around it overall, and we are starting to see those first sort of massive job cuts. So Block, which the ASX investors will be happy with today, rallied 23% in the aftermarket after they cut nearly half their staff. WiseTech was celebrated on Wednesday for cutting a third of their staff. As they start to instigate these AI productivity gains. So, as software companies, you would expect them to be the first to do that. However, they're big job losses, and then we've had the Pentagon having a spat with Anthropic, and Anthropic just recently refusing to remove the guardrails. So they've obviously got some inbuilt ethics that the Pentagon wanted removed. Well done, Anthropic, because if someone doesn't make a stand there, that's going to be pretty disastrous. And however, that means now that Anthropic's going to potentially have to be removed from all Pentagon or Pentagon-related companies. Halliburton, Boeing, everyone, basically, anyone who deals with the Pentagon won't be able to use it, essentially. So there's a bit of a standoff there at the moment, but I think they're probably doing the right thing for not only their business, but their for the broader sector, because I've just noticed in the last 24 hours there is an increasing narrative and an increasing amount of stories coming out about AI fraud. We've got CBA apparently potentially or rumoured to be falling victim to $1 billion worth of mortgage fraud, and the AI documents were AI generated. We've got Woolworths digital chatbot apparently going rogue and then talking about its mother and pining for its mother. And you've got someone's setting Claude onto the Mexican government's website and getting 150 gig of sensitive data. But we hadn't really seen any stories like this about the misuse of AI, and it had all been super positive until roughly about 36 hours ago. And now the floodgates are starting to open, and we've got to watch this sentiment because essentially what it does is it brings people back to this sector of the heat map that we've been talking about on many mornings, where we're going to go back to trusted software, because as much as you want to as much as you can program your own little automated workflows through Anthropic or through Grok or whatever. The question becomes, should you? I could do my own tax return. Should I? No, I should not. Should I build my own house? No, I should get a builder. So it's one of those real world use cases where the domain knowledge really becomes, or your knowledge of your and expertise in your particular area really is invaluable. And these just one size fits all, all purpose chatbots or large language models that are just spitting out answers that are, that are hallucinating at like increasing rates and are giving erroneous responses at increasing rates is going to push people back. ASX doesn't really care because we're not massively AI orientated. I would think, though, our tech sector is going to start to make a recovery as this AI sort of false narrative of, chatbots are going to save the world, rule the world, just starts to go back into the ridiculous box where it belongs. And obviously we've had commodities rallying, etc. as well. BHP's up like 8.5% for the week. It's got to be one of the best weeks for BHP in memory. In recent memory anyway. So, but yeah, ASX continued to higher yesterday. China's still feeling a little bit weaker, and then we've got largely unchanged except for the Nasdaq, which was just pretty much mostly Nvidia overall. So, and that's what the move in the S&P would be. So, yeah, I mean, look, this is the third week in a row where we've had a plus or minus in the S&P under 1%. There has been no real trend, and increasingly, if you're going to see these AI darlings report good earnings and go south, I can't see this thing hanging in there anytime soon. And remember as well, we've got Iran talks, US-Iran talks. The military build-up that's going on outside Iran is currently the largest US military build-up, and if they don't do anything, it'll be the largest troop movement without a military action. There's a lot of speculation around it. Everyone's just assuming they're going to do something. But Trump's now turned around and said the flag significant progress. So, look, I mean, who knows with Trump particularly. You can't really have any certainty around it. I mean, the troop movements are probably the truth. But what's going to happen is there's going to be a lot of questions around him moving those troops and spending all of this money moving all these troops to these particular areas if he doesn't use it as well. So I think he's basically snookered himself at this point. We released our Software Survivors Enhanced Growth strategy yesterday. So it's a structured investment that has it's sort of more, for those of you who know options, sort of buying calls. But for those of you likened to sort of leverage exposure to healthcare IT, enterprise resource planning, software, and cybersecurity, you can scan that QR code. The investment explainer video is there. Kai and myself go through it. Kai's got some really great insights. You can grab the PDF there as well. This will likely close early next week. It's for sophisticated investors only. So it's capital protected to the downside, and around the 6 to 7 times mark leveraged upside. There are a pair of stocks in each of these three thematics, and it's basically around what we've been talking about there. So this is one of my favoured strategies I think we've had in recent times outside of the precious metals. I think that the market has very much got it wrong, and I think the narrative is very much starting to turn. So we're going to look to close this fairly quickly. Do yourself a favour, have a look, scan the code, or go to where our AI threat heat map is, which is mpcmarkets.com.au/AI-threat-2-SAS, and have a look at those. But either way, and if you're not a sophisticated investor, look, there's 6 free stock tips, basically in that video. If you're retail, just go and buy it on market, because I'm really confident that those will, those picks will start to turn around. So and look, another QR code again, but if you haven't got Mosaic, it's the content that's been put out this month, particularly in following these narratives, etc., and getting your recommendations have been have been pretty handy. There's the phone Apple push notifications to your phone, to be getting in and out. I think one of our recommendations this month was MI6, which was instantly headed higher. You can catch that. Jonathan Takadina talk about that on The Trade on Ausbiz as well. But look, for 4 recommendation services, less than a coffee a day, and all of our content and podcasts, etc., we can track the market, so you don't have to. Get on board and and subscribe now, because there's some. It's an increasingly fast-moving market, and with increasingly severe moves up and down, this is a great way to keep track and let us do the work for you. But Bulls versus Bears, episode 108 will be out this afternoon. Myself, Kai Chen, and Jonathan Takadina will be on there, going through the week that was and talking through a few of these main points. There's a lot to talk about, and you can get that on Spotify, YouTube, Apple Podcasts, whatever you want. Have a great day, everyone.